You know, when a giant like McDonald's drops its quarterly numbers, it's way more than just a report card. It's really a snapshot of the global economy. And this quarter, boy, do they tell a story. It's a global balancing act where incredible growth happening all over the world is basically holding up a much tougher situation back home in the US. Today, we're digging right into that story.
All right, so let's go behind the golden arches and do a little checkup for Q2 2025. We're going to explore what's really driving their success, what's holding them back, and, where a company this massive is placing its bets for the future.
Okay, here's the game plan. We'll kick things off with the big global numbers. Then we'll get into the really interesting part, the huge difference between their markets. We'll look at why their international strategy is just crushing it, what the challenges are at home, and then wrap up with their big bets on what's next.
All right, let's dive right in. First up, the global snapshot. So, how did the company do on a worldwide scale this past quarter?
Okay, the big splashy number you need to know is 3.8%. That's their growth in global comparable sales. And you're going to hear that term a lot because it's maybe the single best way to measure the real health of the business, since it only looks at sales from established restaurants.
And what's really great for them is that sales growth, it's flowing right down to the bottom line. I mean, check this out. Revenue's up a solid 5%, but look at the profits. Operating income and net income both shot up a huge 11% from last year. That tells you they're running a really efficient operation. So just to make sure we're all on the same page with comparable sales or comp sales, it's a genius metric, really, because it cuts through all the noise, like new stores popping up or wild currency changes. It gives you a true apples-to-apples look at how the core business is actually doing. But here's the thing. That solid 3.8% global number, it's kind of hiding the real drama. Because when you start to peel back the layers, you find this tale of two completely different markets, the US versus the rest of the world. And wow, does this chart lay it all out there. So you see the US there, clocking in at 2.5% growth. And hey, that's not bad, right? But then you look at the international markets. They're just on another level, almost double the growth rate of the US. And those licensed markets, think Japan for example, are at a massive 5.6%. It's a huge gap. Now, hold on. Before we completely write off the US, let's add a little bit of context because it's super important here. That 2.5%, it might not look great next to those international numbers, but compare it to this time last year when US sales were actually down almost a full percent. So yeah, it's a huge turnaround. The big takeaway is progress, even if it feels a little slow. Okay, so what is the secret sauce for all that amazing international growth? What are they doing so right? Let's break down that winning formula they've got going on, even in a pretty tough global economy. The CEO, Chris Kimchensky, he talks about this a lot. He says in an environment like this, you've got to nail what he calls the 3-for-3 playbook. You absolutely have to deliver on compelling value, have some really exciting new stuff on the menu, and back it all up with world-class marketing. And right now, the international teams are just knocking it out of the park on all three. And this isn't just talk. You can see it working all over the world. In Germany, the Chicken Big Mac just blew up, setting new sales records. Over in France and the UK, they've got this new Big Arch Burger that's driving a ton of sales. Then you go to Australia, and their hot honey chicken is helping them steal customers from the competition. And tying it all together, a global Minecraft campaign that brought more people into stores in over 100 different countries. It's just working. All right, now let's flip the coin and talk about the US. Because while international is on fire, the story back home is a lot tougher. It's all about a consumer who's really feeling the pinch and a real battle over what value even means anymore at McDonald's.
The whole challenge really comes down to what they're calling a bifurcated consumer. Basically, the customer base is split right in two. You've got your higher income folks who are actually visiting more, but, and this is a big but, the lower income customers who are the bread and butter of fast food, their visits are down by double digits. And that is a massive red flag.
And the CEO, he didn't mince words. He pointed right at the problem. He said, when folks pull into the drive-thru and see combo meals listed for over $10, it just kills their perception of value. That price on the menu board, that's everything. It's what makes people feel like they're getting a deal.
Or not.
So you can see how this pricing thing creates a real squeeze. Let's look at the numbers for the restaurants McDonald's owns themselves. Their margin is sitting at about 15.5%. And that number is so important because it shows you the tightrope they're walking. They have to keep prices low enough for customers to feel good about it, but also high enough so that their thousands of franchise owners can actually stay profitable. It's a really tough balance.
So what's the counterattack? Well, one of the biggest moves is a direct assault on that value problem. They're bringing back the snack wrap after 9 long years, and they're advertising it nationally for just $2.99. This is their big play to get those value-seeking customers back in the door. Okay, so even with all those headaches in the US, don't think for a second that McDonald's is just sitting back and playing defense. No way. They are making some huge, long-term bets designed to fuel their next big growth spurt.
And maybe nothing shows this better than their loyalty program. The power here is just incredible. Check out this jump in the US. It's wild. Before someone joins the loyalty program, they visit about 10 times a year. After they join, 26 times a year. I mean, that is an absolute game changer for how often people are coming in.
And believe me, they are scaling this weapon fast. They've already got 185 million people actively using the loyalty app worldwide, and they're pushing for 250 million by 2027. The bigger that number gets, the more that boost in visits is going to power the entire company.
And this is all just one piece of a massive push to modernize a whole system. They're rolling out new edge computing systems with Google to make the restaurants smarter and faster. They're making sure their Best Burger initiative, making the food taste better, is in pretty much every market. And they're on an aggressive expansion plan to hit 50,000 restaurants around the globe by 2027.
Okay. And another huge bet for the future? Beverages. They're testing a whole new lineup right now because, let's face it, the drinks market is huge, it's growing, and here's the kicker, it's way more profitable than food. And one thing they've already learned is that people want awesome, ready-to-go drink recipes. They don't want to play barista and customize everything themselves. So the goal is super simple. Get people in the door for a drink and sell it to them at full price. No discounts needed.
So at the end of the day, we're left with these two very different stories. Overseas, that playbook of value, innovation, and great marketing, it's a home run, no question. The big, defining question for McDonald's now is, can they get these huge new bets on loyalty, on tech, on beverages, up to scale fast enough to fix that tricky value problem they have right here at home? That, right there, is the global balancing act we'll all be watching.